The past week has been a roller coaster ride for the US and global economies. From Wall Street to the halls of international institutions, a sense of unease prevails. Trade wars, political uncertainty, and the specter of inflation have cast a long shadow on the economic outlook. The US stock market has been on a volatile ride, reflecting investor anxiety. The Federal Reserve is grappling with tough choices, caught between controlling inflation and supporting economic growth. Meanwhile, the global economy is sending mixed signals, with some regions showing resilience while others struggle. The question on everyone's mind is, what does the future hold, and how can we navigate these turbulent times? As we delve into the specifics of this economic turmoil, it's crucial to understand the interconnectedness of these events. The decisions made in Washington, D.C. have ripple effects across the globe, impacting everything from stock prices to the price of bread in a small town. The stakes are high, and the need for sound economic policies has never been greater. This report will break down the key economic developments of the past week, examining their impact on the U.S. and the global economy. We'll explore the factors driving stock market volatility, the Federal Reserve's policy dilemma, and the consequences of federal budget cuts. We'll also analyze global economic trends, including the Donald 25 effect, the OECD's downgraded forecasts, and China's strategic response to U.S. trade policies. By understanding these complex issues, we can better prepare for the challenges and opportunities that lie ahead. The road ahead is uncertain, but by staying informed and engaged, we can work towards a more stable and prosperous future for all. Let's dive in. The U.S. stock market has been a whirlwind of activity this past week, with the major indices experiencing sharp swings in both directions. The Dow Jones Industrial Average, a key indicator of market sentiment, surged by an impressive 400 points early in the week, fueled by optimism surrounding potential trade deals with Japan. However, this euphoria was short-lived as news of escalating trade tensions with China sent the index tumbling down by 300 points on the same day. This volatility is a clear sign of the nervousness gripping investors who are grappling with uncertainty about the future direction of the United States economy. The S&P 500 and the tech-heavy NASDAQ composite mirrored the Dow's volatility, experiencing similar swings throughout the week. The root cause of this market turbulence can be traced back to the ongoing trade war between the United States and China. The imposition of new tariffs on Chinese goods has rattled investors, who fear retaliatory measures from Beijing that could further disrupt global trade and hurt corporate profits. This uncertainty has led to a flight to safety, with investors pulling out of riskier assets like stocks and seeking refuge in more stable investments like bonds. The trade war is not the only factor weighing on investor sentiment. Rising inflation, fueled by higher import costs resulting from the tariffs, is another major concern. Inflation erodes the purchasing power of consumers and can lead to higher interest rates, which can slow down economic growth. The Federal Reserve's efforts to combat inflation by raising interest rates have also added to the market's volatility. Investors are wary of the Fed raising rates too aggressively, which could choke off economic growth and potentially lead to a recession. In this climate of uncertainty, businesses are also feeling the pressure. The ongoing trade war and the threat of further escalation are forcing companies to rethink their supply chains, which have become heavily reliant on China. This restructuring is costly and time-consuming, and it is adding to the uncertainty surrounding corporate earnings. As a result, businesses are becoming more cautious about investment and hiring, which could further dampen economic growth. The stock market's roller coaster ride is a reflection of the difficult challenges facing the United States economy. Until there is greater clarity on trade policy, inflation, and interest rates, investors are likely to remain on edge. The Federal Reserve, America's central bank, is facing a daunting challenge: how to steer the U.S. economy through a perfect storm of headwinds. Inflation, fueled by escalating trade tensions and supply chain disruptions, continues to haunt the economy, eroding consumer purchasing power and threatening to derail economic growth. The Fed's primary tool to combat inflation is raising interest rates, which can cool down the economy by making borrowing more expensive. However, raising rates too aggressively carries its own risks, potentially stifling economic growth and even pushing the country into a recession. Federal Reserve Chair Jerome Powell, in his recent pronouncements, has expressed deep concern about the trajectory of the U.S. economy. He has acknowledged the threat posed by inflation, stating that it remains unacceptably high. Powell has also warned that the ongoing trade war with China is a significant contributor to inflation, adding to the upward pressure on prices. The Fed chair has hinted at further interest rate hikes in the coming months, signaling the central bank's determination to bring inflation under control. However, Powell's statements have been carefully measured, reflecting the delicate balancing act the Fed must perform. While acknowledging the need to tame inflation, the Fed chair has also emphasized the importance of supporting economic growth and a strong labor market. The Fed is acutely aware that raising rates too quickly could backfire, slowing down the economy and potentially leading to job losses. This delicate balancing act has left investors and economists alike on edge, as they try to decipher the Fed's next move. Adding to the Fed's predicament is the uncertainty surrounding the global economic outlook. The war in Ukraine, the ongoing COVID-19 pandemic, and geopolitical tensions in other parts of the world are all contributing to global economic instability. This instability makes it even more challenging for the Fed to forecast the impact of its policies, as global economic shocks can quickly reverberate through the U.S. economy. The Federal Reserve is navigating uncharted waters, facing a confluence of challenges that require careful calibration and a steady hand. The coming months will be crucial in determining whether the central bank can successfully steer the U.S. economy towards a soft landing or if it will be forced to make difficult choices with potentially painful consequences.